Simon, thanks very much. It's at the end of the month, it's the end of the quarter, but let's begin by taking a look at the end of the day. For the most day, the market vacillating between losses and gains, and we're ending up down on the day. Any particular points that you picked up during the trading day?
Yeah, I think probably just to touch on the point you made there that, throughout the day we were generally weak, and it was probably over the last hour or so that the market picked up as there was some better than expected data coming out, economic data coming out of the US. As with global markets, volatility is the name of the game, and we saw that across most local counters. We saw, for instance, a R6 swing in MTN. There was a lot of pressure on Richmond today. That was down over 5% at one stage. It obviously is quarter and month end, so there were anomalies do creep through as people rebalance their portfolios. But I think for traders it was quite an exciting day because there were opportunities. Absolutely.
If you can just take a look at some of the numbers that are coming through now. So we've got down the most on the day. We've got the gold producers, no surprises. Harmony down 5.2%. We've got Bidvest down 5.1%. Anglo Gold and down 4.3%. And Goldfields down 3.8%. Surprisingly joining them though is Nedbank down on the day 3%. Anything to read into that?
Yeah, I think on a day like today, you always are going to get strange prices. There were rumours coming from some traders that the Man Group, the large UK hedge fund group that has experienced some redemptions, had to redeem some South African equities, and that was placing further pressure on the market. But just looking at some of the share prices, it looked like there was some big adjustments in the closing auction, and I think we'll see some of those normalise on Monday.
Absolutely. If we look at the other end of the table in terms of perhaps the better performance, in fact, not much here. Everybody seems to have been down. No, in fact, I need to correct here. The gold producers were up on the day. All those numbers that I read them upside down. Harmony was up 5.2%. I need to repeat that. Bidvest up 5.1%. Anglo Gold 4.3%. And we also had Nedbank up 3%. But at the other end of the table, now these are the companies that were down on the day. We had Richmond down 5.6%. Assol down 5.3% as well. And then also Shoprite and Exxaro showing declines on the day. Again, I suppose you can't read really much into this.
No, there doesn't seem to be any consistency in terms of the drivers across specific sectors. It just seems across the board, certain shares have sold off, and not specific to any sort of entity or company specific.
Right. Now, if we look back over the month and all the issues that we've had coming through the market, I mean, we have had the issue of the Germans and what they were going to do with that European Stability Fund, whether they're going to approve it or not. That approval came. Is that the stimulus that the market needs to be able at least to look forward and say, after a bad September, we can look forward to better trading come October?
No, I think it falls well short of the mark there. The market really needs to see some sort of massive catalyst from either the ECB or the American government to get us out of the tailspin that we're in at the moment, economically speaking. And until we get that, I fear the market is just going to be fairly range-bound, much like it has been over the last couple of weeks. And we get some certainty on terms of economic growth. In particular, the problems in Europe, those need to be isolated. They need to be sorted out. The market's wising up. They don't want to see the can kicked down the road, so we need to deal with this problem in 3 or 4 months' time again. They want certainty and the problem cleared up for once and for all. And I think once those errors have been addressed, then we move into an environment which is more conducive to growth, because as we know, equities are cheap, money is plentiful. In terms of corporates, they're managing to grow their businesses. Dividends are growing at a higher rate than inflation. Sure. And as I said, valuations are cheap.
Right. Now, at the same time, though, Warren Buffett does say that when the markets are like this, he comes in and he picks and he finds value. Are there pockets of value that have been exposed by the extreme pressures that we've seen on the markets?
Absolutely, and today was a good case in point where you get 5 or 6% swings in a day on companies that have already been trending down. One does pick up opportunities, and the big opportunities for us today were in MTN, buying that below 130. I think it bottomed out at about 128. Richmond was also very attractive, and Bidvest, which was one of the best performing shares on the day, but earlier on it was actually down a couple of percent.
Yeah. Now, one of the companies that reported today was Phumelela Game and Leisure. Would you put that as a buy?
Yeah, it's a share we've looked at over the years, and a very good result from the business. There are winds of change going through there. The international operations contributed a high performance, and it looks like they're going to have a very good 2012. I wouldn't be surprised to see the business deliver 15 or 20% growth, off a historical dividend yield of about 6%. The valuation does look cheap. I guess where I struggle in terms of the valuation, the business model, is the visibility of earnings,
right.
and what the business is going to be doing in terms of 5 to 10 years.
Right.
And one of the things we always talk about when we look at a business is the moats around a business and how strong the business model is. And we saw recently that they lost their rights to broadcast some racing in the UK. They've subsequently been renewed rights with SIS at twice the rate, but that's only for a period of 5 years. And what happens when that falls away? So there are my questions around the business would be in terms of the visibility and sustainability of long-term earnings.